Alrighty, hot diggity dog. Doc here from North America. Good morning, good afternoon, and good evening. It is, thank goodness it's Monday. So it's a TGIM. And the world seems to be a little bit more shakier today than it was on Friday. And Friday it was a little bit more shakier than it was on Thursday. And it was a little bit more shakier on Thursday than it was on Wednesday. And for us, we're all in these daily cells. I like the normal, day with us. It's all normal to us. So anyway, we are. I guess you can see it. Yeah, you were seeing it. Let me just double check. Let's get up on there, and I got to give Robin his link. He's not finding the link today. Let's see, go like that, and then so let's see right there. There we go. We'll be able to see the chat line. And so what we really have going on is that the markets are doing what our algorithm's telling us it was supposed to be doing. So we're not concerned about any of this. We've talked about this so many times here. We have a spreadsheet up there. You can see it's in the middle between. Let me just go back and check. Let's see, where is it at? Let's copy this so Robin can see it. I believe that's it right there. Let's put that up there and see if Robin can get into that. Right there, right there, right there, right there. All right, so up on the screen. Now let me go back to the screen, make sure I'm seeing what I'm seeing. Now why isn't it coming up? Oh, okay, so there it is. I need to skip the advertisement. There it is. Okay, it all looks good. So, and let me just double check the sound. Oh, there it is. We got the sound all good. So what we do is we look at our algorithm every day. We discuss that. We discuss what's in the news. We talk about the derivative universe. And what is the derivative universe? It's binary options, underlining, or we don't really talk about futures too much, but we look at a lot of futures, because futures are basically like it's just a basic asset with a clock ticking on them. So, they kind of are like a call option or a put option, except for you have 100% delta to it. So it's, an option could be 10% delta. It could be 90% delta. Whereas, a futures contract is 100% delta. Apple stock. If you buy the stock, it's a 100% delta. In other words, it's a full-fledged risk factor. So let's see if you got that. Did you get that? Need to send it. There we are. There we go. So what we see today is Janos and I have talked about this, and what we try to do now is try to express what we're looking at, each day. And you see a spreadsheet in the center there. That's what, let's get the mouse. And that's what that is right there. And you can see, like, here's Apple. It's 2 weeks in a sell, 14 days in a sell in our mathematics. We can go look at like a stock indice. There's the S&P 500. You see it's 2 weeks in a sell and 2 days in a sell. See, the markets are not surprising us. We can go, for those that are volatility orientated, we can go down and take a look at the VIX, which is the S&P 500 volatility index. And you can see it right there on the spreadsheet, right there. The VIX, 3 weeks in a buy, 3 days in a buy. And now that we go and look at that, let's look at that chart, because it's going ballistic. It's going ballistic today in our favor. But I'm not here to, beat the drum. I'm just here to talk about algorithms and how successful ours are. That's all. And they've been that way for 45 years. Robin and I traded on the floors with them, and we've been we're old floor traders, members of pretty much every exchange there ever existed, especially on the United States side for sure. And you can see here there is the VIX That's today's VIX right there. Definitely a little bit bigger today than it was yesterday, that's for sure. So that's the action. Good, you're up. I see that, Robin. How you doing? Excelente. Excelente. I've updated the beta. It's got all this on it again, so you can look at that. And what else we got? We got a beta platform for those that are fascinated to understand our watch our algorithm. So you can let me just show you what the beta looks like. Where are you, beta? That's not it. Let's minimize that. No. Oh, I guess that's what it is. I opened that up. So that, yeah, I get rid of that. There we go. So there is our beta. Matter of fact, let's show you the same chart on the beta that we're seeing on our normal everyday chart. There we are. And there's the beta right there. You see it's marching up just like the one on this one right there. And that's our beta platform, and there's our weekly buys for the last 4 weeks. This is starting the day off in the 4th week of a weekly buy. So yeah, just a discussion here, always of anything and anything, all things, whatever. We call ourselves the cyber pit, like cybernetic pit, or holographic pit. Basically, I'm not going into the Suskine world, but it's we're into that. And it's as far as we're concerned, since there's no floor traders anymore, we have to be all electronic, which we all speculated back in the late 80s, early 90s that we were going to be that way. And here we are. Here we are. So let's take a look at the dollar index and see how the dollar index is looking this morning. Right. DX right there. And as you can see, it's drifting down the same way. It's updated right now. You can see that. You can see a couple days in a sell. It's been 5 weeks now in a sell. And like I said, we're not usually too surprised around here. Our algorithm is 86 out of 100% right over the last 45 years. It's consistently that way. So if you are someone that actually understands odds and statistics, then obviously you just keep on following the algorithm, and it will set you free. Set you free and make you as calm as we are on a day where the Dow Jones now is down over 1,200 points. And, obviously we knew to have some binary put spreads on, going into today. And it is what it is. And for those that we had this conversation, I think, on Friday and Thursday, we keep on reminding people, you don't need to sell your equity positions. Just sell a call. Take the premium from the call. Buy a put. And a la voila. No tax liability of taking a big profit. And at the same time, your assets will grow on the put side if the market falls like it has been falling. And so, it's a winner chicken dinner. Because if it goes up, you're long the underlying product and it covers the short call. If it goes down, the short call pays for the insurance to cover the underlying product. We talk about that. Nobody drives an automobile without insurance. No one owns property, houses and so forth, or boats or jet skis or whatever without insurance. People have life insurance, so their loved ones are compensated if they pass on earlier than they should in life. So why don't the money managers of today discuss the insuring of assets? I don't know. I could say all kinds of things, and I don't want to sound, vicious, so I just say, I don't know. They just don't. So they're willing to tell you to drive a car or own a car with no insurance, or own a house without any fire or property insurance, or have life insurance or hospital insurance. They're saying basically get rid of the insurances. You don't need them. That's what they're saying, which confuses me enormously. Because I would think that your assets are just as important as your automobile or your house or your health insurance or your life insurance. I would think that. At least I do. I guess they don't. So there it is. Now let's dance our way over to the euro and see how the euro's been. And we've been talking about this. The euro refuses to go into a weekly sell, even when you can see we went into daily sells like right there. And it glided down for about 5 or 6 days. Then went into a daily buy and failed the next day and was gliding down. And then we went into the buy on Friday right there. Let's put a little line in there. Makes it life easier for people. Because when it gets through the zero line, it's in a buy, especially with a green dot. No dot and green dot. And so and the red dot, obviously downside, tells you there's problems, It's telling you that that's more of a volatility thing, the dots. But in the end result, what you're really seeing more than anything else is that you're seeing the euro. It's been climbing on a daily basis since Friday, and it refuses. The weekly just refuses. The longer term investors or money says no, we're not selling this weakness. We're buying it. And then look at this. Within a day, one move brings you almost basically back to where it went. This is where it went into the sell. Where was it at? Was it right here? Let's double check that. See, I don't think it did. It was, as you can see there, plot 1 in that little teeny box was 0.ZZZZZ3. So it was a plus. Whereas this one, the next day, it is minus 0.ZZ or 0.0065. So it went into the sell here. And in one day, it took out that sell after all those weeks. And that's why, we watch the weekly and we coordinate the weekly algorithm with the daily algorithm. I hope that's all. I'm trying to be very clear, not condescending. I'm trying to be very clear so that people actually understand what they're looking at. And so the spreadsheet is a running historical success failure. In other words, you look at the spreadsheet and you go, oh, okay, this is how many days it's been in a weekly buy, and this is how many days it's been in a daily buy or a weekly or a daily sell or vice versa. And you can say, okay, now let's look at a chart and go, okay, is it accurate or is it inaccurate? And obviously we are 86% of the time accurate, not 50-50, and 14% of the time inaccurate. And when you use options for your position, it increases your gain, not decreases it. So, because you're limiting your risk and opening the doorway for unlimited gain. I'll say that again because sometimes that goes over people's heads. When using options correctly, and there's a correct way of using them, and we explain it here with no problem, and that is that when using them correct, you're setting up a position that will have limited risk with unlimited gain. And today's a day where that unlimited gain really makes it beaucoup, as they say in Vietnam. A lot. Great. Good. Very good. So that's the story, traders. That's the story. So we try to start off with an explanation of what you're looking at, so that you're like, okay, yeah, I'll stick around and maybe I'll ask a question, or just observe what's going on and look at the spreadsheets and so forth and so on. That's what we do for this hour every day now for about, I don't know, Giannis, was it 12 years, 11 years, something like that? I would say probably at least almost 12 years. So, all right, from there we go over to the cable. Cable's been fascinating. I keep on seeing these stories about a civil war in England, so maybe that's why it's having its issues. And finally, look at this. This one's doing the opposite of the euro. It's breaking down. And we actually, I guess, what we saw, we labeled this, we labeled Friday's webinar specifically because we saw it breaking down. And we said, hey, look at the euro GBP spread right there. And we went into the buy 3 days ago, right there. We rarely ever look at it. But I look at it, but I just don't put the lines in since I understand my math even, more comfortably. And it closed in a weekly buy last week, right there. And so, it's like, oh, okay, it was in a weekly sell here. And it's turned into a weekly buy right there. So it's still a winner chicken dinner. Well, it was a winner chicken dinner many times. Every sell you had, and you had a weekly sell, was a wonderful, very yummy win. Same thing. And then the buys, the green dotted days, told you just to be flat. Just make sure you don't hurt yourself. It's in a weekly sell, but in a short-term, day-to-day basis, it's trying to go up. So that's how we read this, and we're just trying to make it very clear to everybody how we read this and how it works. If Janos, you're out there, does that make any sense? Robin, am I making any sense, or am I sounding... I'm trying to be professor-like. Trying to make it simple. Occam's razor. The simplest explanation is the best explanation. So, all right. And so you can see there, that was our title, too, on Friday. Euro GBP, flirting with weekly buy, and that was at this time in the morning. So we knew that it was, unless something extraordinary happened, it was going to close in a weekly buy, and of course it did. And here we are, ripping like a rocket ship. It's like an Elon Musk rocket ship taking off efficiently and landing calmly. That's why we're calm this morning with let's show you what the stock market's doing. This is a good one to see it by. This is the intraday. This is last night's action. It settled in the 5,300 and what was that? 5,374 area, almost 75. It was 34.75. So 5,375, and it's trading at 5,142. So it's you're talking about being down almost like over 200 points. You were late. It's okay. I think I made a very good explanation of what we're looking at on our tools here today with the spreadsheet in the center. Chicago Quant Technologies, that's us. Dukascopes is the host up top, of this webinar. And we are, marching along, just trying to make it very simplistic and clear. And, dialoguing. I got a lot of questions. You got a lot of questions, don't we all? Let's see, VIX is the buy signal still, yes? Oh, yes, it's intact. Check this out. Where did I put it? Oh, you know what? You can't see what I'm looking at right there. There you go. So that is the S&P 500 from last night, down a couple hundred points. Now, for Mr. and Mrs. VIX, the lagging indicator. Let's go over to that lagging indicator. Right there. There it is right there on the old platform that we use and trade off of. And then we have the beta. Let's show you what the beta is looking like, which you need to sign into, Janos. You need to get that beta. It's for free. So, you can look at it for a couple weeks. And for you, we'll have a discussion. There's no problem there. And at the same time, you just go over to Chicago Quant if you're interested in looking at our work. Right there, you can contact Robin. Our email address is right there. Chicago Quant Technologies.
Market data connection lost.
Can you see that? No. Too many screens. And there it is right there.
Market data connection reestablished.
You can see it again right there. Chicago Quant Technologies. See, I'm highlighting it down there on the left. And there's us. And there's our host, Dukascopy, the Swiss Bank Group. And there is our spreadsheet right there. So, oh yes, intact. Intact. VIX is a buy signal still. Oh yeah. It's what's it? 4 days in a buy. I was pointing it out on the spreadsheet to make it related to the chart. So you can see right there. Here we go. I'll highlight it on the spreadsheet. There it is right there. There's the VIX. 3 weeks in a buy, 3 days in a buy, and today is the 4th week starting and the 4th day in a buy. And it's to the moon, Alice. It's again, it follows the action in the underlying products. It does not predict it. That's the thing. People always thought the VIX predicts. It's a confirmation thing. If the VIX is taking off, it's because the markets are being sold down enormously hard. That's pretty much what it comes down to. Okay. We also have rather fresh signals to sell NVDA, MET, Tesla, and Google. Yeah, let's go take a look and see. Here is NVDA on the beta. Let's see. Let me open this up. It was in a sell on Friday. It's in a weekly sell on the beta. And then we're going to show you the live right there. You can see there's the weekly sell for the 3rd week. Been a daily sell for a bunch of days. You can see that. And it's in a sell there. Tried to lift up a little bit on, is that the beta? Is that MVDA? Yeah, MVDA. There it is. Okay. So then, let me make it the smaller chart like that. This way you can see all 3 algorithms, or the 2 algorithms with it right there like that. And then we go over to the live situation right now on our trading chart. And let's open that up. Open Sesame. Right there. And there is, that's Tesla there, but let's put and there is, there's Tesla. What was the next one? Meta. Let's go find Meta. There's Meta. Meta's been in a sell for all the way up in here. It's in a daily sell for a while, even with that wild pop a few days back. Same thing. 2, 3, is it 4 on the spreadsheet? Meta is, we'll tell you in a second. There it is. Yeah, this is the 4th week. Here is Meta. So Friday it was 3 weeks in a sell and 2 days in a sell. 2 days? I think it's 12 days in a sell. I must have lost the 1 there. Let's fix that. DS. There it is. And so, it's been feeling a lot of pressure for a while, Meta. And then what was the other one you looked at? Google. Google, right there. Google did get into the buy there, and then it's the 3rd day in a sell. It's the 3rd week though in a sell. That's the thing, is that it's been, went into the daily sell here and went down for all this action. Then our math flipped it into the buy for that little pop, and the next day it gave you instant gratification. It popped up, and if you were able to take profits, good for you. And then when it closed in the sell that day, and you could be short here again. So this is the 3rd day down, and there it is right there at the moment. So this would be the 4th day down. And let's just see. Google. Let's check out Google on the spreadsheet right there. There it is right there. 2 weeks in a sell. This is the 3rd week now. And as you can see on the chart right there. And this is going on the 4th day. Today's the 4th day. And you can see on Friday it was the third day. So there you go. How's that? I had an open calls on VIX, but closed them on Friday. So the question is, should one re-enter now? The move is big already. The only way I re-enter now is through a binary. I would not be naked long the calls at this point, because the volatility is so high. You got to sell volatility to buy volatility. So go with a binary. So in other words, if you're buying the call, you'd buy something like the 55 call and sell the 60 call, that type of thing. Try to do it for really close to free money, as cheap as possible. And then if it takes off again, then it's... Now remember, the options on VIX are European options, so you can't exercise them. So the logic is to buy time, not like next Friday or something like that. Because one change of direction, they're basically not going to really reflect the real price. Because they're not exercisable until expiration. The market makers discount them at times because they don't believe something can stay up here, and I'm sure they don't believe it's going to stay up here in the 50s for more than maybe a week and a half, 2 weeks, something like that. And so imagine if it stalls out and the markets go sideways a little bit in here for the next couple of days. I think, and this is my personal opinion from slides in the market over the last 5 decades, and that is that between now and Thursday, this will play itself out. It usually does. Usually it'll play itself out. A crash of 87 played itself out that way, but then on Friday, it fell apart again. And then on Monday, it fell apart again. Tuesday, it tried to bounce back up and then started to fall apart. Then on Wednesday, it stalled and stayed balanced. There was a mild panic on Thursday that cleaned it all up. And before you knew it, that was the bottom of the market. And there's a lot of people that still owe me $100 bills for calling that back in 87. So that's the answer to that one. Okay. I hope I answered that question for you, Janos. So I did, as you suggested, I made it very clear about the system and how we read the system and how you can view the system. And if you want to, get a spreadsheet sent to you for free, or you want to try our beta program out, you can go over to Chicago Quant Technologies. I've done the whole bit. Got it. We'll re-enter, but get more time. Exactly. If you re-enter, you want to go binary because of the pumped volatility now. And 2, the market makers are obviously knowing that they can, to a great extent, they can outlast the expiration. So, you got to go like a month out or something like that. You got to get some time on your side. This way, they will increase in value if it goes up, whereas if you buy something that's only 2 weeks or 1 week or something like that, then what happens is that they will not always... The delta will be, what's the best way to describe an option spread like that? The delta will not be linear because they're going to be betting inside the game that it won't last. And that when it doesn't last, then they're getting away with selling high volatility and trying to buy it back at lower prices. So yes. All right. Now, from here, we answered all those products, I believe. Yes. And let's go take a look at, we can go look at other currencies, or if anybody would like Janos did, wanted to see something. I'll go back to the currency charts. And if you have a question out there, just sing it. We're very glad. I always like to say, I need to take a sip of water. But I always like to say that there are no dumb questions. There are no foolish questions or stupid questions when dealing with money and trading. Okay? The only answer I always give is they're only long answers or short answers. That's all there is to that. So don't be afraid to ask a question, because we can give you if I don't know it, then Robin might know it. And if Robin doesn't know it, we both know where to go to find it. That's what it comes down to. All right. So from there, we slide over to... where do we slide over to? We slide over to the great bankers. We need a Swiss banker to run our Federal Reserve. That's all I got to say. And you can see here, it's when this is going down compared to, say, the British pound against the dollar or the euro against the dollar. When it's going up, it's gaining against the dollar. But here, with the dollar Swiss pairs trade, when the saltine is heading south, it's gaining against the dollar there. All right, so you can see here 4 days in a sell. You can see lots of weeks in a sell. It's been in a sell for a while there. Let's see, what's it say on the spreadsheet? And that's what I'm going to do, is I'm going to coordinate what we look at on a chart to the spreadsheet, so you can see why the spreadsheet is used. And there it is right there. Dollar Swiss, 10 weeks in a sell, 3 days in a sell. That was Friday. And today is the 4th day and the 11th week. All right. Oh. They're saying, they really, they don't really understand banking as well as we wish they did. And so what's happening is, we're hearing a lot of the politicians whining, and some of the Democrat fund managers whining, cut the rates. And we saw what happened when everybody cuts the rates too soon when you have inflation with their strategy. I don't agree with their strategy. I don't like their strategy at all. I think they don't combat inflation whatsoever correct. But in that system, the answer is, starve the market of assets, let the economy head into recession, and then lower interest rates to bail it out. That's their strategy. It's a bad strategy, but they do it. That's what Democrats do. Whereas Mr. Trump, who was president for 4 years before Mr. Biden, did the opposite, and the economy grew beautifully, and everybody was making money, and it was all good, and salaries went up, and inflation went down. He had like a 1.4 inflation rate. I don't know why Mr. Biden keeps on saying he had a 9% inflation rate, but he does. It's not true, of course, but he still says it. But that's Biden, because they like to do that stuff. So in the end result is that when you're fighting inflation the way Mr. Biden's Federal Reserve is fighting it, the only answer is, after starving the economy of equity and supply, go out there and I think they used to call it helicopter money. As a matter of fact, there was a story this weekend about how helicopter money in China won't work this time. And, China has taken an enormous dip. I'm going after that right now. I'm taking a look. I've been meaning to look all morning long because I saw the Shanghai index down in the 2000 area. And I could have sworn it was at the 3,000 area no more than like 3 or 4 weeks ago. So we're going to get that up on the screen here. There it is right there. Nah, okay, so it's not down as bad. It's only down 1.5%. I thought it was at 2%. So when we go into a 6-week scenario, you can see. Well, let's show you what I'm looking at here. So, we were up in the, where were we at? Back about 3 months, we were in the 3,100 area, 3,200 area, something like that. And now we are in the 2,800 area. So we've lost, not the worst thing in the world. We've dropped about 6%, 7%. Let's see, 140 and so 300 points. We're about 12% down overall in the Shanghai. So, and I saw Tokyo. Let me just tell you what Tokyo did. I know that they halted the markets last night Tokyo was down 7% at one point last night. Let's see what they did. Where's the Nikkei? It's around here somewhere. Taiwan. There's Taiwan. Taiwan's down somewhat like that too, like 12%. You can see it here over the last 3 months. Was up around the 24,000 area. Now Taiwan is the semiconductors and a lot of this AI type of chips, so it's feeling more of a pain. It's more like 20% down. And then let's see, where is the Nikkei? We'll find the Nikkei in a few seconds here. There's the Nikkei. And the Nikkei last night started to feel that pain even more. Undefined. What do you mean undefined? Let's see. Let's try that one more time again. And see natural gas. Nikkei future. There's a Nikkei future of September. Let's see if we can get that again. There it is. All right. So we've gone from. Let's see. I think it's gone from like 42,000 down to 32,000. So that's a 25% drop. And last night it was a 7% drop in here. So there's the tech side is feeling this slide. And yeah, and look at they're saying that the Taipei index in Taiwan was down 8% last night. I'm surprised it's not on here. Why it's not reflecting, I don't know. But let's see if it'll show what it was by just highlighting it. Yeah, it's a lot of pressure on the markets. Let's try this. Here we go. There's the Asian. There we go. The Hang Seng was down. There it is. They were down 12%. The Nikkei last night. I saw them halt them at 7% in the beginning of the night. And we're getting a bounce back, too, on the stock market here. We're up a couple hundred points from when I was pointing it out earlier. Let's show you our intraday math, which works just like our daily and weekly math. And let's go over to that for a second, like so. Show you the most short-term chart right there. I call this, it's a 1.6 Tesla. That's what I call this. Because we use spatial mathematics. And so you can see here, it bottomed right there. That's the 6 month low right there about, what is that? About 37 minutes ago when we started the webinar. It did it almost on the webinar. And it's funny how they do that on me. And then you can see it had a nice bounce from the 5,120 area up to the 5,071 area. Back and fed a little bit, got down into the 38 area there. And now it's going after the 5,200 area. It's at 5,182 as we speak. And now I'll just make it even more visible. It went into the buy last bar. Now we don't pay attention to the red and greens except for the idea that it just represents activity, heavy activity if you get a red and a green. And so we're in a buy here. And we'll see if it keeps on trying to fight its way up to this top again. Got very close to it. And you can see it's trying to dip into that cell. It's very close. See it ticking away. Oh, you don't see a ticking away line. There we are. There we go. So it's really trapped. Maybe it'll try to do another rollover. This is a Bollinger Band I put up there. Someone asked to compare one technical tool against another, and I'm always ready to do that. I love doing that, comparing one technical tool against our technical tools, our algorithms. So you see here, it's really trapped. They're trying to take it up. You can see our algorithm is trying, and now look at that. They're putting some real pressure on it now. Let's see if they dip it or if it jumps above before it closes. Jumps up again. And what do we got? We got 300. We have 200. We have 100. And new bar. It's still in a buy. So it's still battling, trying to get up. Banging against the center point in the Bollinger Band there. Our math is ahead of the Bollinger Band always. Or generally 9 out of 10 times. And same thing here. It's trying to climb again. It's still in that buy now since back in right there. Since right there it's been in the buy. So it's still pushing up. And you're watching it live. This is not Memorex. And so you can see here they're trying. And they're trying and they're lifting and they're pushing and they're shoving and they're making it go, 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 go. Hey! All right, where am I at? I had an open calls mixing. I got it. We'll re-enter. Okay. Doc, but why buy time if you say that all of this could calm down by Friday? Because the delta won't be the same, and time delta, they'll sell it. The market makers will sell it in the beginning. So in other words, you could when a lot of people always complain they buy something and then it goes down. Well, what will happen is that you might buy short term, like 3 days, 5 days, something like that, or 10 days. And then what they'll do is they'll sit on the premium. So it won't go up when it's going up. And then what will happen is if you go out further, they can't sit on the premium as much because they're taking greater risk by selling it further out. Now, they may be saying, the market makers in VIX, because it's a European exercise, they're probably thinking the Fed will come in and save us so we can pressure it. And that's what they're thinking at this moment. They're not thinking, oh my goodness, the VIX is at 49. 2 weeks from now it could be 75. They're not thinking that. They're thinking, the Fed will come in and save us, so we'll sell that premium and try to knock it down. And so if you buy time, just as and then you do it in a binary way, not naked because of the high volatility. You buy it in a binary way. Then what happens is that when the Fed does not come in and save it, then all of a sudden the market makers will have to drive it back up again and you'll make your money. That's what I'm saying. I'm not a big fan of using the VIX. I like individual options, exercisable. So to me, trading VIX is a waste of time because the market makers have way more longevity than the average investor. And that's why I don't think the volume is that big in there to begin with. Money managers use it to just show their investors that they're hedging something. But it's a European exercise, and with a European exercise, it's only exercises at expiration. They have trading strategies that benefit from that, whereas the average buyer of premium in there doesn't, unless you do things through binary. Well then, what about exact plans for the stocks like NVDA, Meta, and Tesla? Yeah, you can buy those options and the volatility, so forth, because they're exercisable. They're American style. They're exercisable, so they can't play the same games as the VIX traders do. And we see that, and we see people complain about it all the time. And so the average VIX trader sells premium all the time. They're always selling premium because it won't follow the normal delta pattern, the linear delta pattern that exercisable options do. And if you want me to explain the difference between American exercisable versus European unexercisable until expiration, I can do that. I can explain all the magical words. And as we've been talking, you can see here the intraday chart went into a sell right there, the fourth one back. And you can see it's working its way down now. You're watching live algorithm. And we always remind people here that if you have a system and it doesn't work on all frames of time, then you're not using the right tool. And we can always explain that one too, if anybody is curious about what I'm saying here. Matter of fact, I think the title today, Giannis, will be is Only Trade Exercisable Options with High Volatility. Matter of fact, that's going to be our title. I'm going to send that out right now while it's fresh in my little peanut brain. Let's see. Let's see. There, and there. Title. Title. Trade only exercisable options. Let me just do that. Exercisable options. Exercisable. Exercise. There we are. Exercisable options only. Where are we at? Just got taken out. Let's see. Trade only exercisable options in high vol. Let's see. Is that too long? Yeah, how about this? Use exercisables only. How's that? That seems better. Use exercisable CIS, not D, S. I miss Steve Jobs. Exercisable exercisable. There it is. Options in high volatility. There we go. Volatility. There we go. That's going to be the title. All right. I'm getting pinged. Let me see who's pinging me. Oh, okay. Yes. And Tom Bubby. All right. All right. There we go. All right. So that's going to be our title today, because that's an important thing. Using the options correctly is very important. If you don't use them correctly, it becomes like a losing battle there. All right. Cool. All righty. And congrats. All right. Did that work? Did it go somewhere? All right. So where are we at now? Okay. So they turned around again, went into a buy. I wasn't even looking. So traders, were you watching? It went into the buy right there, and it's still in the buy, and it went back up again. See that? That's what started me off on Dugoscopy 12 years ago. They respected things like that, like being right, being accurate. Indeed. All right, traders, where do we go from there? Let's shoot over to the currencies again, unless someone wants to see something. And there's the Swiss, and let's go to the yen. The yen, I was really, I saw this funny picture of, last night with them down 7-8%, and it was like the $20 trillion swap generates headaches. That's what it said. They really, really beat up on them on this big major swap they have on in Tokyo. $20 trillion swap. Sounds like Deutsche Bank and Citibank all over again, huh? Basically, there's the yen. It's gaining against the dollar. It's a good thing. And then from there, we shoot over to having a piece of chocolate. Oh, the great experiment. Aragon, former prime minister, now president, has been doing all these experiments to the Turkish economy now for about 10 years. Their currency has gone from 1 to last night, another all-time high, 37.4988. And it's now back in the 36s. And it used to be 1. And so whatever experiment he's doing, he's got to explain it to me because I have no idea what he's doing. It is out there in the twilight of crazy. When your currency goes from 1 to 37, you could assume that if it was 1 to 3, you're trying to devalue your currency and your assets in the country to get foreign investors. That would make sense. But then when it jumps to 6, the foreign investors get a little nervous. You're going from 1 to 6. Ow. What happened to the investments you bought at 3? They've lost 50% of their value. So could that experiment that former Prime Minister Aragon and now President Aragon is doing? No. Instead, it went from 6 to 12. So again, investors who came from outside the country and bought at 6 and 3 have lost 75% of their money now. Oh, that's even more than that. It's not even 70. It's beyond 75%. And so then, if you were a foreign investor and thought, okay, this is it, no problem. 12 is a piece of cake. It won't see 24. Wrong. It's trading now at 36, almost 37. So obviously, whatever strategy this former prime minister / president has, I have no idea, and I call it the great experiment, because all he keeps on showing me is that his currency keeps on turning into funny money. It's losing its asset value constantly, which is hurting the country, which is hurting the people. And so I'm not sure why he keeps on doing it. Maybe he's into S&M. I don't know. He's into pain, I guess. And so now it's gone from 24 to 37. God, surely we're not looking forward to 48. But on the course that he's on, I guess one day we will see 48. And it may not be this year. Maybe next year. I don't know. But sooner or later, he's got to learn that the experiment that he started when it was at 1 and at 3 and then at 6 and at 12 is not helping anybody. Let's put it this way. It's not helping the population of Turkey. It's not helping the businesses that invested in Turkey. Maybe, I don't know. I just don't know. It's like the way our Democrats are here in the States. They do a lot of weird things to hurt the people, and then they tell you how much they love the people. So that's it. We're going to end right there. You know what? We're going to do one more minute, and we're going to show you where everybody else is. There's South African Rand. It's moving up, we would assume. Then gold is going down. Usually when the Rand loses against the dollar, gold loses too. There's gold dropping down, a sell on Friday. It's down again today. Is that today? Yeah, that's today. And you see that pressure on that. You can see it's flirting with the weekly sell as we speak. And then from there, we go over to silver. And there is silver. It's been in the weekly sell now for 4 weeks. and it's in a daily sell for a second day. Then you can see them on the spreadsheets if you go and look. Let me just move that up. Spreadsheet. So what I'm looking at right now is all up in here. You can see it, silver and gold and so forth and so on. And then copper. Copper's been 4 weeks in a sell, going into a daily sell again today. And then you have natural gas going down, 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 which is a good thing. We see platinum. We'll do energies and metals. You see platinum sinking, sinking, sinking. 4 days in a sell, 4 weeks in a sell. You can see heating oil, which feeds the airplanes and diesel trucks and heats the houses. That's been going down, and it's in a sell, 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 sell. And then we go to crude oil, going down, 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 down. And 4 weeks in a sell right there. And we've had enough fun. So this is Doc from North America. We will catch you all tomorrow. Same time, same channel. Where is it? Where am I? There it is, right there. Well, half of that is not available to retail traders in Europe. Yeah, I know. What? We are... Yes, you are. Again, binaries. Use binaries. Use something that works. Binaries work. Okay? And there must be individual options. Amsterdam used to have individual options all the time. Amsterdam must still have individual options. I don't think they shut the Amsterdam exchange down. Matter of fact, I thought that they bought the London option exchange. So, anyway, I'm out of here. I'll check into all that. This is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all my Docoscopy friends. Later, traders. Catch you tomorrow, same time, same channel. Ta-ta.